Welcome to the Capital News. I am your host, Alex Karitis. Today is April 1st, 2019. Happy April Fool's Day to everybody out there. Happy Monday. I hope everybody enjoyed their weekend. So some of the market news today. The S&P was up 33 points or closed 1.2 percentage points to the upside. The Dow was up 330 points or a gain of 1.3%. The Nasdaq was up 100 points, also a gain of 1.3%. And the Russell 2000, the small cap index, was up 16 and a third points, which translated into 1% to the upside for the day. I told you guys this was coming. I told you the volatility of these plus or minus 1 percentage moves were coming. Felt it in my bones. It's what my volatility model said to me. It was what was going to happen, and that's what we are starting to see. How long will this continue is anybody's guess, but I foresee, look, it's April already. We already have 3 months behind us. We'll see what these other months bring us, but I expect more volatility. We've already seen the intraday swings, definitely of 1%. Whether it closes up or down 1% is another story, but clearly today they closed all 1% up or greater. Where does this leave oil? Well, oil is at $62. So where does this leave our tweeting president in regards to oil prices being too high? Will he demand OPEC and Russia continue to prime the pump? Keep it going, baby. Keep pumping. We need these oil prices to come down, although he also wants a weaker dollar, don't forget. So I don't know which one he wants. If he can somehow magically get both, I guess kudos to him. But not kudos to you if you have a weaker dollar, because now all of your cost of living adjustments have just gone through the roof. Now it takes more dollars to buy the same amount of goods that you purchase. And we know most Americans live paycheck to paycheck and don't have $400 cash should they incur an unfortunate emergency. So this is not an economic miracle. Now, if you want to say that 78% of Americans living paycheck to paycheck is an economic miracle, be my guest. If you want to say the vast majority of Americans not being able to come up with $400 cash in the event of an unfortunate emergency, go ahead and call that an economic miracle too. Be my guest, but I am not going to say so. It doesn't seem very strong or healthy to me. So oil's at $62. Not good for the consumer, so we're told. We'll see where it goes. Gold remains below $1,300 an ounce. That's the benchmark we're looking at now. That seems to be the new range, the new level. So it's now at $1,290 an ounce. Silver is also at that $15 level and is at $15.03. The 10-year Treasury continued its climb. It now sits at 2.497%. 2.497%. Recall last week we were in the 2.3s. Okay, so quite the move recently, and today that translates into a gain of 3.44%. So quite the rally in the yield today. The VIX was down 2.25 points, so the VIX now sits at $13.40. I mean, this is just quite the whirlwind we are in. This is a continuation of the land of Oz. This is a disjointed market from the underlying economy here in the United States and the global economy. Any type of good news is the best news ever. It doesn't matter. Any type of bad news, it's already been priced in. At least that's what the market pundits and analysts will tell you if you watch Bloomberg, if you watch CNBC, if you watch Fox Business. Remember, folks, they are trying to sell you something. I'm just here trying to give you the truth. I am trying to give you my analysis. That's all I do. I could be wrong. I might be right. I just look at the data. I paint the picture. Sometimes it's pretty. Sometimes it's lukewarm. Sometimes it's downright nasty. Right now, it's, leaning more towards the lukewarm, nasty side of things because it definitely, in my opinion, is not good. We have a big disconnect in a lot of things. We talked about the yield curve. We talk about the consumer not being as healthy as everybody claims that they are. The 7 million people who are past due on their auto loans, 90 days plus. Record amounts of credit card debt, student debt. Mortgage debt is back to where it was pre-crisis. Whole host of things. Corporate debt in the stratosphere, government debt, no end in sight, $22 trillion and counting, USDebtClock.org, it'll make your head spin. Nobody talks about these things. Just keep going to the store, baby. Keep buying. Keep buying. Get another credit card. Keep buying. You're healthy. You're healthy. This is the best economy ever. No, it isn't. No, it isn't. And let me just tell you of some more evidence, in my opinion, that we are in a bubble. Lyft. You've heard of it, Lyft. The car share riding, whatever you want to call it, like Uber. Lyft. It IPO'd last week. $72 a share. I know it went up. I didn't follow it closely. I think it might have hit the 80s at some point. Well, guess where it is today? It is down and now sits at $69.01. $69.01. It is down for the day 11.85%. Let me repeat that. It is down 11.85%. Remember, a 10% decline is considered a correction. Well, it is well into correction territory. Hasn't even been trading for a full week. I don't even think by law that Lyft can even be sold short yet. It needs to be able to trade for a few days before the short sellers are allowed to come in. So is there going to be a pile on? What's going to happen here? This company was valued, I think, somewhere in the $20 billion range. $20 billion. And get this, if you're not aware. This company loses $900+ million a year. It loses $900 million a year, and somehow Wall Street values it at 20-some billion. How can you make this up? How can you make this up? If this is not the definition of a bubble, I don't know what is. This is beyond the pale. But it really isn't, because we're so used to it. You're so smart, my listeners, I know this. You're used to it. But for those who might just be joining, maybe you're used to it. Maybe that's why you're here, preaching to the choir. Maybe I'm getting some converts. I hope I am. This is a bubble. I mean, how fantastic would it be to say, well, I'm a fantastic businessman. I lose money year after year, and Wall Street thinks I'm worth $20 billion. Oh, my goodness. You can't make it up. You can't write it. This, I'm cautious to use the word never, so I'll say rarely, if ever. This would rarely, if ever, occur if we truly had free market capitalism in this country. Because this type of thing happens quite frequently because of funny money. You print it, you create it out of nothing, out of thin air, because you have the power and authority to do it, whether that's directly through the Federal Reserve or whether that's through our fractional reserve banking system, which is a complete fraud and hoax. And if the people understood what it was and how it works, there would be a revolution tomorrow. And that was basically a paraphrase of Henry Ford many, many years ago, saying if the people of this country understood what the Federal Reserve is, does, how it operates. And this was back when it just came out. I mean, it has put the pedal to the metal since the 1970s, and really since the financial crisis. If people really understood what was going on, there would be a revolution by tomorrow. I believe that. But most people are in their stupor. Up your Zoloft, honey. Go to Delaware, take your nap. Do what you got to do. Trust the government. Don't worry about a thing. Mommy, daddy, government's here to guide you. Just go buy more crap you don't need, you can't afford. Okay? Get to it. Shoo along, little children. The government's here to take care of you. This is ridiculous, but this is the world we live in. So if we had free market capitalism, this, in my opinion, would rarely, if ever, happen. Because people are saying, whoa, wait a minute. Whoa. You want to IPO. Okay, that's all right. All right, you want to get on the stock market. That's great. That's fantastic. Good. You run a business. Good for you. I admire the entrepreneurship. Good. You got people to work for you that like your product. Boom, boom, boom. How much money you make? Oh, we lose $900 million a year. Oh, great. You're worth $20 billion. That's what just happened. That's what just happened. How many people, I guess, by that logic, should still be in business? I mean, all they need is some smooth-talking Wall Street salesman to underwrite this thing, and there you go. There you go. I mean, the other thing you have to look at, too, if some of you are aware of this, maybe some of you aren't, there is a whole bunch of ride-sharing, I guess you want to call it, with scooters. There are scooters all over the world now, parked on city sidewalks, somehow activated by GPS, whatever, apps on your phone, however it works. I don't know. I'm not getting on a scooter. Some bus will run me over. But they're all over the place. They are littering the street. They're all over the place. And now when you watch some of these news stations like Bloomberg or whatever, you'll see on the news up there, because if you're familiar with it, they have some news that just goes across the screen like they all do, but that's what I like to read on there. You see hundreds of millions of dollars. I'm not kidding you. Hundreds of millions of dollars going in to these scooter startup companies. Hundreds of millions of dollars for scooters. Are you kidding me? This isn't curing cancer. This isn't doing anything of great import. It's cluttering the streets. It's really causing, I think, a bigger menace to people who are driving on the street. Now they got to look out for other lunatics. Like it ain't bad enough driving around worrying about other drivers and bus drivers. Now you got to worry about lunatics scooting around all over the place, plus the people on their bikes. I mean, come on. Hundreds of millions of dollars for scooters? Are you kidding me? How much money are these people making? Probably nothing. Probably nothing. They're probably losing $10 billion. They're worth $100 billion. The more you lose, the more valuable you are. That's what we are in. That's where we are. That's why there is no such thing as bad news anymore. It just keeps going up. And if it is bad news, well, they say, well, okay, well, then the Federal Reserve is going to come rescue us. The ECB is going to come rescue us. The Bank of Japan is going to come rescue us. The People's Bank of China is going to come rescue us. So there is no bad news. Mommy, daddy, government's here. Actually, the worse the news, the more likely it is they're going to come help us. So just keep buying. Just keep buying. This is the biggest setup ever. Ever. This, and it's getting really scary because it's really becoming a fool's rally. I don't know if we're going to end up in a fear of missing out mode, where a whole bunch of people who have been getting into bonds or have been getting into cash are going to say, oh my goodness, I just lost out. The 20% correction back in December, I didn't get in. Oh man, I was down 20%, but now I'm back to where I was. Should I put more money in there? Should I keep it in cash? Should I get into bonds? What should I do? What should I do? I don't know. Because this is the craziest thing I've ever seen in my entire life. I know what I'm doing. I tell you guys what I'm doing. I have money in cash. I have some bonds. I have some of this market sold short. And I still have long positions. I'm all over the place. Because this market's all over the place. So if there is some sort of event, and again, net, my mind anyways, not necessarily my positions, but my mind is net short the market. That's where I ultimately see it going. So when things get more in that direction, I will obviously allocate resources accordingly. Gold, silver. I mean, you have to be everywhere. You have to be diversified. Now, from what I think is going to happen, I don't know how much good that's going to necessarily do you, because I really think it's going to be another systemic event, like a 2008, 2009, where diversification will only do you so good. But it's better than being lopsided, especially if it's lopsided in the wrong place. So do your homework, pay attention to this show, pay attention to other people like it, talk to your financial advisor, whoever you have to, and come up with a plan. That's the most important thing. Just come up with a plan and stick with it. It might not be the best plan, but it's better than no plan. Come up with it, put some thought into it, and then act accordingly. It's what you have to do. That's what I'm doing. But this is just beyond the pale crazy. Now Uber is supposed to come out, and Uber loses even more money than Lyft. So Uber's probably going to be valued at $30 billion. I mean, that's how this works. The more you lose, the more you value. That's the higher your valuation. This is the same thing with like Tesla, the electric automobile. I haven't looked at their share price recently. I don't know where it stands, but I do know in the not too distant past, and I'm sure it's probably still true today, their market cap is as big as General Motors. General Motors has been around for decades. Proven vehicles, proven business model, and they're still here. Now, of course, they were bailed out 8 years ago, 10 years ago. But in the auto industry, that's par for the course. It doesn't matter where you are globally. Look it up. It's very difficult to manage and sustain car companies. The labor has just been through the roof. You have these union contracts. You have a whole host of other things. But there's just, you have to have the demand. I mean, there's a lot of inputs to producing an automobile. It's a very expensive, capital-intensive endeavor. So most of them go out of business. Most of them need some sort of government subsidy. I'm not saying that's right by any stretch of the imagination, but that's just the history of them. So here you have General Motors, Tesla. Tesla is more valuable than General Motors. They've been around for a decade. They barely sell that many vehicles. I mean, this is the world we live in, because we have all of this funny money sloshing around and it can go somewhere. And I say, oh, well, that's the future, man. Can you dig it? That's the future. Everything's going to be electric. Maybe it will be. But until you have a proven concept, until you have the type of sales, and Tesla loses money. So I guess as I sit here, that makes sense. They should be more valuable because they lose a whole bunch of money. This is what we're up against. You want to try predicting the day-to-day swings? You're crazy. You're a madman. You're a fool. April Fool's Day, you're a fool. Don't do it. It's a sucker's game. It's a sucker's trap. I don't know what's going to happen. A lot of people are starting to say, well, you know what? Look, if you just look at the last quarter numbers, Q1, because this is already April, so Q1 is in the books. Q1 is basically a record-setting quarter, reminiscent of 1998. Well, what was 1998? That was in the midst of the dot-com bubble. Dot-com bubble. Nobody on the face of the planet argues that that wasn't a bubble, that that wasn't nonsense. Now you have a whole bunch of lunatics out there saying, oh, look how great everything was in 1998, and how that's reminiscent of today, or how today was reminiscent of 1998. Isn't everything great? Isn't it all wonderful? Hey, knock, knock. Do you remember what happened in 2000, 2001? Oh, yeah, that's right. The NASDAQ declined 80%. 80%. Is that what you want? You want the rush? Do you want the downfall? Come on, guys. Get serious here. Do some thinking. This is the problem. There is no humanity left. It's all about the almighty dollar. And it has been for a very, very long time, but that's the problem. It has stolen our humanity. This is why everybody's at everybody's necks. This is why populism is all over the world, because people instinctively know that something is amiss. Maybe they can't speak about it articulately or eloquently. Maybe they can't quite put their finger on what it is exactly, but they know in their gut, in their heart of hearts, that something is wrong. Something is amiss. Well, buckle up, because it ain't going to be pretty. When? I don't know. We had the yield curve inversion. Typically, when you have a recession, it follows that yield curve inversion 20 months after the fact. 20 months after the fact. So that puts us well into next year, almost 2 years from now. That's a rule of thumb. It's not a law. Maybe it'll come sooner. Maybe it won't happen at all. But that would be the exception, not the rule. Because I told you, this is a very big piece of the economic puzzle. I personally put a good amount of weight on the yield curve. Well, we had an inversion. Did the media put it into overdrive? Perhaps they did. Perhaps they did. But it is definitely not archaic. And it is most definitely not different this time. In fact, if it's anything, it's going to be worse this time because we have more debt this time. You cannot say that 08-09 was caused by too much debt, and then look at the amount of debt we have today. It's by far higher than where it was a decade ago. I will be having some podcasts, hopefully this week, discussing with you some further data that I have been looking at, just to sort of get a better glimpse of how these markets have behaved, what has been their catalyst, what has been moving them. And it is no question that it has been funny money. It has been the Federal Reserve. It has been governments all over the world and central banks all over the world with stimulative effects that you and I all have to pay for. So we all felt good today, but guess what? We're going to have to pay the piper tomorrow with interest. With interest. And you ain't going to like it. Believe me. Even if you are prepared, even if you do position it right, even if you do time it and you're lucky, you ain't going to like it because it ain't going to be good for a lot of other people. Believe me, it will not be pretty. So you have that whole hysteria. You continue to have U.S.-China trade talks. Of course, everything is going swimmingly well. The Chinese are supposed to be here this week to continue with the trade discussions. And just one point, just to throw this out there to you guys, just so you're thinking sort of like I'm thinking. Maybe that's a good thing, maybe it isn't, but I'm just throwing my thoughts out there. Something to think about because of the interconnectedness of the markets. Let's just say, for the sake of example, Trump does put together a fantastic deal, all right? And in this deal, we have it that the Chinese say, look, and I'm just making these numbers up. Look, we, the Chinese, we need 1 million bushels of wheat. That's what we need, 1 million bushels of wheat. We already source it. We source, let's just say for the sake of argument, we source half of it from Russia and the other half from Brazil, okay? So 500 bushels each from each of those respective countries. Trump comes in and says, all right, you know what? I want some of this. I'm trying to help out my farmers. We got a lot of wheat. It's good wheat. It's the best wheat ever. The best. It's the best. You want some of this wheat, don't you? And they say, well, yeah, we can do that. We can get some wheat. But guess what? That doesn't mean that the Chinese now need 2 million bushels of wheat. You sign a trade deal, it doesn't magically mean that their demand doubles or increases 1 bushel. They're just saying, all right, we will now buy some of this wheat from the United States. Now, that might be a good thing for U.S. farmers in some of those communities. Might be a fantastic thing. But guess what? It ain't good for the Russian farmer, and it's not good for the Brazilian farmer. Now, you might say, okay, well, we're not Russian, we're not Brazilian. Okay, fair enough. Fair enough. But my question to you to think about is, we are a global economy. We are very interconnected. Do you know what that means? Okay, let's just say for the sake of argument that the Chinese say, all right, you know what? We'll cut theirs in half. So the Russians and the Brazilians will each be responsible for 250,000 bushels that we'll buy. And then the other 500,000 bushels will come from the United States of America. That might be fantastic for the U.S. farmer, again. But that may very, very have a negative impact on the Russia economy and the Brazilian economy. And what does that mean? I don't know. Do you know? Is there going to be a negative downward effect because of that? Maybe there's some bonds that are tied to that, and now the farmers aren't going to be able to make good on it. What type of interconnected element does that have to this story? Because you have to remember, ladies and gentlemen, the subprime crisis back in 08-09, it really kicked off in Iceland. Many of you may not be aware of that because it isn't discussed that often, but it kick-started in Iceland, a little country that nobody ever talks about. So you don't understand completely, and that's everybody. I'm not just saying you guys, that's everybody. That's myself included. Nobody completely understands the interconnectedness of everything. So it might be great that farmers in the Midwest now are selling more wheat, and good for Trump for making it happen for those farmers. What about the Brazilian farmers? What about the Russian farmers? That might have some effect. Maybe it has no effect. Maybe it has zero effect. Maybe they can find another buyer for all of that wheat without a hitch. But maybe they can't. And so now what do you have? Now you might have excess supply of wheat on the market. Well, if you have excess supply of wheat on the market, now you have lower prices. Is lower prices going to be a good thing for the farmers who are selling wheat? Probably not. So these are the types of questions you have to ask yourself when you're trying to connect the dots, when you're trying to put the pieces to this economic puzzle together. Real briefly, before we go here, a couple other items I want to discuss. We have some forecasts for GDP for the first quarter, now at 1.5%. Those are some of the major forecasts, all converging around 1.5%. So that's nowhere near 2%. It's nowhere near 3%. It's nowhere near 4%. 1.5%. But maybe it was better than expected, so the markets continued to rally off of that news. You also had some better than expected manufacturing numbers come out of China. You also had some better manufacturing numbers come out of the USA today as well. Last week, we mentioned how Larry Kudlow was out on CNBC giving an interview saying immediately the Federal Reserve must cut interest rates by 50 basis points. Now, I didn't know this at the time, because I do these podcasts later in the evening, and I actually had not looked at any of the president's tweets or any statements or anything before I did the podcast. But I know when I was doing the podcast, I told you guys, watch, that the president will tweet about this, that he too will want the Federal Reserve to cut interest rates, or at least he will say that that's what he wants. And sure enough, there are tweets out there. Sure enough, it was more official than that. There was not only was there a tweet from the president saying that the Federal Reserve is basically to blame here and that they should cut interest rates, but there was actually an official statement from the White House saying what the president wrote in his tweet. That's how serious this is. This is what I'm telling you. The president is dancing. He took ownership of the stock market, and now he's getting nervous because there was a yield curve inversion. Larry Kudlow knows what that means. There's a whole bunch of other data that we talk about here all the time that is not pointing to an economic miracle. Maybe it's starting to set in that, oops, I shouldn't have taken ownership of all of this. Oh, that's what I've been saying. Hire me, Mr. President. I will work for this country. I will work for this country. This is ridiculous. To me, that is just a foolish move to do that. You didn't have to do it. You have a base that loves you and follows you. You have a whole bunch of independents and even Democrats who would cling to this message because, believe you me, if it's not going to be Pocahontas, it'll be Bernie Sanders who goes after the Federal Reserve and Wall Street banks to some degree. You could have gotten people off of this. Now, taking ownership for this, it really makes you look like you're one of them. You're one of the good old boys, which is what you're not supposed to look like. But when you take ownership of the stock market, which most people are not involved with and don't have any understanding of what's going on, it doesn't make you look good. Now, again, I have, not all the confidence in the world, but a high degree that the president will win in 2020 because of who he's up against and because of what I think is going to be coming out with a whole bunch of other things, particularly with the political scandals and a whole bunch of what I hope to be true justice. And you don't know what I'm talking about, follow me on the Geopolitical podcast. I talk about that all the time there. So continue to pay attention to what Larry Kudlow says, what other economic advisors to the president says, and what the president himself says and tweets out there. He's dancing. He's trying to put the blame and set it up if this market goes down, if the economy does slow down, whether or not it goes into a recession or not. But if it slows down, he's going to blame it on the Federal Reserve. He will take all the credit if everything's fine. If something goes wrong, it's not his doing. It's somebody else's problem. So be aware of that. Now, the other thing I wanted to talk about, but I'm running out of time here, I see. I do want to talk about federal tax receipts, the tax receipts that come into the federal government. So I have some good information on that, so some other data. Nothing urgent today. It's not breaking news or anything like that, just some stuff that I've been looking into, sort of some other indicators as to where we are as an economy and where this market should actually be. So we'll continue that conversation later in the week, and enjoy the rest of your day, guys. It's been a pleasure having you as always. Please like, share, subscribe, get the word out, leave your comments. I'd love to hear from you. This is the Capital News. I am Alex Koritis. Godspeed.